Everyone, welcome back to my channel. So today I'll be sharing a short video on what to look out for when you are buying insurance. So do not buy insurance before watching this video. Okay, let's go. Okay, so today I'll be sharing about things that not every financial consultant will share with you. Okay, so other than price that most people look at, there are really actually many other things to look out for. Okay, so let's get on to it. Okay. First thing you should do is to check what you already have. And why should you check? Because you should be adequately insured and not over or under insured. So let's say you have some policies that you don't know about, so you might buy whatever that is sufficient to cover the amount, but you actually have some policies that already cover it. So in that case, you'll be over-insured. And then under-insured is also not a good thing, because when you need the money, you won't have enough to support yourself then. Okay, so all policies are still valid and should be taken into consideration during planning. So some examples are policies bought by parents, and then in future you have to take over the policy servicing, I mean the policy premiums. And then not all policies terminate automatically if the premiums are not paid. So for example, your parents bought policies for you like many years ago, then they thought the policy is gone already, but actually it can still be there even though the premiums are not paid. So you need to check on all this. Okay, and then if you want to retain these policies, you will normally need to make up the premiums not paid in the last few years. And then these premiums that you pay, right, should be taken into account for premium affordability planning. Okay, so how do you check what you already have? This is the question, how, because like most people only have like paper, everything in paper last time, right? But now everything is online really. Okay, even your super old policies, they are all online. As long as you create an account, you can go in and take a look. Okay, so if your policies are from AIA, GE, Prudential, FWD, NTUC Income, or Tokyo Marine, they have this SingPass login. So basically, you just go there, scan the SingPass QR code, and you're able to log in already. Okay, some other insurers not so high-tech with SingPass login will be AXA, Manulife, Singlife, Aviva. So basically, these are the ones that you really need to create an account to log in and see. Okay, then how to check if it's actually other things like government policy. So even some like government policies, right, it's actually with the insurers, with the private insurers such as Great Eastern Dependent Protection Scheme, or like Aviva, MINDEF, MHA Group Insurance . So these few you need to log into the individual private insurers to check, because you won't be able to check from the government website. However, there are some policies that the government is the one that is the issuer. So if they are the issuer, you can check from most likely it will be deducted from your CPF so you can check from your CPF dashboard. So some examples of governmental policies are like CareShield Life, Home Protection Scheme, CPF Life, Integrated Health Shield Plan, or MediShield Life. Okay, so Integrated Health Shield Plan is normally with the individual insurers but you can see who is the individual insurer that you have your Integrated Shield Plan from if you want to check from CPF website. Okay, so they will also tell you are covered under MediShield Life if you are PR or Singaporean. Yeah. Okay, let's move on to the second point. So second point is you and your family's health. So how can this actually affect? So if it's a hereditary thing like breast cancer, Huntington disease, all these, it can actually affect whether you are offered on the standard terms. Standard terms means everybody else is paying 100, maybe you also are paying 100, so that's standard terms. But if you are paying more, that means you are not offered on standard terms. Okay. Other things is very most importantly is your health whether you have previous instances of like lumps, high glucose level, high blood pressure, high lipid levels, all this. It can affect insurability. So what's insurability is your ability to get full insurance with no exclusions. So like there are many plans around, like for example Health Shield. If you get exclusion, it can be exclusion of your leg, exclusion of certain parts of your body so that's called exclusions. So your health will definitely affect your ability to get coverage with no exclusions. Another thing is loading. So just now I was talking about offering a standard terms. So standard terms is no loading, but non-standard terms will be loading So loading is like you pay more premiums than others. Then the worst case scenario is decline. decline means cannot buy at all. They don't even want to offer you the insurance. Yeah, so you might get a shock lah, because you think you're very young, you think you're very healthy, and then you try to apply and maybe you can be declined, totally cannot buy. Yeah. Okay, so how to check on you and your family's health? What do you need to do? Check on health booklet. I think health booklet not much lah, but yeah. Okay. Most important, you can check this Health Hub application and website. So basically, you log in with your SingPass, you can check all the like previous hospital admissions, all this discharge summary. Some details will be on the Health Hub application. And also, if you do any health checkup, right, with the government or with government affiliated clinics, right, they can also actually be updated in this Health Hub. Okay. Then if you also got keep your health reports, all this is your health reports lah. Okay. Then if you previously do any genetic testing for breast cancer, Huntington disease, all this can actually affect your insurability. Okay. Lastly, can also consult your family doctor lah for any history that you and your family might have. So lastly is to open up your mouth and ask your parents lah. Because actually, if you don't declare some stuff that you already have and it's actually in some records somewhere, when you try to get the claims, this will come and bite you in the ass lah. So yeah, very important to declare fully of what you already have and it's already in the hospital records or whatever record somewhere. Yeah, please declare. So if you don't declare, they can not admit the claim. You can void the whole insurance. Okay, so you pay the insurance for nothing. You won't even get your premiums back. Yeah, because it's like you made a fraudulent application. Okay, next we move on to consideration on needs and suitability. So why do you need to consider? Okay, so what are the areas of consideration? So the main areas of consideration will be the number one thing will be medical cost lah. Because medical cost is so expensive in Singapore, right? So yeah, first thing you need to consider is a hospital and accident. Okay. Then next thing, even though you have kids, no kids, you will also fall sick. Okay, so fall sick is critical illness and medical cost lah. So critical illness, why you still need a critical illness on top of your medical cost plans, right? Is because if you're sick, you have no income. Other than paying your hospital bill, you still need to pay your everyday bills, right? So if you're unable to work, where is this money going to come from? Nowhere lah. Okay, so anyway, if you don't purchase this critical illness insurance when you're unable to work, you will eat into your own retirement fund or savings, and then some stuff are not fully covered under like accident or hospital plans lah. So if you read the recent news, there's like cancer drugs not approved by MOH will not be paid out by integrated healthcare plan. So all this you have to take into consideration when buying a critical illness plan. Okay. Next is work disability. So work disability plans are not always sold by all insurers, so you need to check which insurers offer this. Okay, so work disability is a plan that pays you a certain amount of income as long as you are declared unfit to work for your current job. Yeah, so this is not like your usual total permanent disability. It will be like something like even mental illness. For example, your teacher, you develop mental illness, cannot work with kids, all this counts as work disability. Okay, don't need to 断手断脚, don't need to lose a leg, hand or whatever. Simple things like doctor sign hand got this movement thing or whatever. Could be a mental illness, could be a real illness developed due to muscle something. So all this count as work disability. So as long as the doctor declares you unfit to work, this is a work disability. Okay, so there are many types of work disability plans lah. We're not going into detail here. So but this should be a huge area of consideration lah, because you can't work. Who is going to support you? Your parents? Your spouse? Yeah, so anyway, this is really a huge area of consideration. Okay, next is total permanent disability. So work disability is when you can't do your work. Total permanent disability refers to when you 断手断脚啦, so you lose your eyes, your hands or your legs, or you can't do the 6 activities of daily living lah. So out of the 6 activities of daily living, you can't do 3 or 2, it counts as a total permanent disability. Okay, so got a few definitions of total permanent disability. Okay, then last few considerations is death too early, death too late, or already you are quite old, you're thinking about leaving something for your kids, so that legacy planning. So all these three are about death lah. So death too early, why do you need it? I mean, you only need it if you have dependents lah. If you don't have dependents, it's not very important. Okay, retirement planning, I believe everyone needs lah. I mean, whether you think you are going to survive until retirement, it's always good to plan for it, right? Yeah. Okay, so how do you put all these things into consideration for needs and suitability? You need to sit down and think about it, or you can sit down with your advisor and think about it. So like for hospital, which ward am I okay with? So am I really okay with a B2 or C class ward? If I'm okay with B2 C class ward, okay, I continue with my MediShield Life. Actually, no lah, I wouldn't recommend continuing with MediShield Life because MediShield Life does not cover pre and post hospitalization. So even so, if you are okay with B2 C class ward, just get the basic integrated health shield plan, which is really very affordable. I think less than 1K a year. Yeah, you can get it with the rider and the main plan. So it's really very cheap for those kind of plans. It's covered pre and post. Pre and post can rack up a lot of costs, I tell you. Yeah. Okay, so second consideration, if you're a foreigner, which currency to be insured in. So for example, I'm a Malaysian. Do I want to be insured in Malaysia ringgit if I'm working in Singapore? So let's say one day 10 years down the road, I'm really sick already, but I only buy my insurance in Malaysia, and now the Sing dollar is 1 to 4. How am I going to be enough? I mean, it's not going to be enough to protect me, right? So you definitely want to be insured in a currency that you will be using to pay for all your bills lah. So currency to be insured in. Okay, so just now I mentioned about CI. So CI, how much you should be protected for. So if you have read watched my other videos, you know that there's two kinds of CI payout. One is a recurring, one is a single payout. So single payout means once they pay, then that's the end of the plan lah. Recurring is I pay for this cancer, then I pay for heart attack, then I pay for many different CI. That's called recurring. Okay, so how much to be insured for is like 3 years. If it's recurring, should be enough. 3 years of annual income. Whereas if it's just a single payout, I would think you minimum need 5 years of annual income lah. Yeah. So also CI is also split into many different kinds. I believe you heard of early CI and major CI lah. So if you only get the major CI, it means you have to progress to the late stage where you're already going to pass, then you get money. To me, that's not very meaningful, so always get early CI if you can. Okay, then we move on to early death and TPD. So if death happens too early or total permanent disability happens too early, you should be covered up to 10 years of your annual income. Okay, and then you need to think about extent of and length of coverage. So for example, you're already married with kids, and then you want to cover until your kids are fully grown up. So usually 65 or 75 is enough. But if you want to always be insured even after 75, then you need to think about paying more premiums lah, because it's going to be more expensive. Okay, and extent of coverage. Extent of coverage usually applies to critical illness. So like there are many critical illness plans in the market, but it's like there are many different conditions that is stated in the individual plans lah. So for example, I will not list the name of the plans lah, but it's like plan A versus plan B. It can be this one is covering 50 condition, this one cover 100 condition. So definitely the premium is going to be different, right? Because the extent of coverage is different. Yeah. Okay, then the next area of consideration is product types. So product types, there are mainly 3 kinds lah. Term, life, investment linked product. Okay, so I think I did a video explaining these 3 differences, but I'll just give you a brief overview on these 3 differences. So basically, term is pay as you use lah. So if you don't use it, you will never get anything back. Okay, pay as you use. Life is usually cover until 100. I mean, term can also cover until 100 years old. So life is the difference is actually in the cash value lah. So let's say I actually buy life plan, but at 80 years old I decided I don't want to be covered anymore. I want to take some money. I want to take all the money out of my plan, so I can take money back. Whereas in term plan, if I cover until 100 years old, I take any money out of the plan at 80 years old, I'll get nothing back. The plan will just be terminated. Okay. So both can terminate, but just that this has no cash value, this has cash value. Okay. Then investment linked product, basically it's just what it says it is lah. Is my premiums go into investments, and premiums go into investments. Then the insurance charges, right, is deducted from your investments. Okay, investment linked product. Okay, next area of consideration is what people don't usually tell you lah. Is insurer reputation and premium amount. Because insurer reputation is definitely important in the sense that if you go for the cheapest premium, right, can you be assured that you will actually get the payout? Like okay, just one example, like travel insurance. There are definitely bad and good insurers, right? If you always go for the cheapest one, right, you might not get the full coverage that you need lah. Yeah. Okay, so is there really a difference between different insurers? Well, the short answer is most likely. Okay, premiums differ across insurers and product type due to the various things lah. So contract definitions of coverage. So like I mentioned just now, the number of CI considered, and then what is the additional coverage that they afford you. All these are wordings, policy contract. Yeah, so all this makes a huge difference. Okay, another one is the underwriting process. Why is underwriting process important? Because let's say lah, Company A is very stringent in the underwriting process. So they always accept only like good insured lah. Means people who apply, right, those people who are like bad eggs, right, they just don't accept them, or they do a lot of exclusion, so they do not need to pay out a lot of claims. So these are strict insurers, and then like people usually don't really like them because they say, oh, why so strict, everything also cannot. Yeah, so this is the strict underwriting process. But the thing is, with this strict underwriting process, they will pay out less claims. That's because if they pay out a lot of claims, right, and the premium pool is unable to support the claims, right, they will have to raise premiums. So let's say they tell you now, right, the premiums is 1,000, but a few years down the road, they realize this premium pool cannot support, right, they are going to increase the premiums. So underwriting process is a huge thing in different insurers. So let's say insurer B is like, everyone also accept lah, I just ask you a few questions, you can be accepted. Yeah, come and buy my plan. So this kind of thing, right, you definitely need to a shitty premium pool, and then next time they need to increase premiums. I believe you heard of insurers increasing premiums halfway, even though they tell you this premium is like guaranteed or whatever, but nope, they will still increase premium if they need to. So don't only go for the cheapest premiums, I need to see other intangibles. Okay, and you need to read the contract whether the premium prices is guaranteed or non-guaranteed. Okay, so if it's non-guaranteed, they can definitely increase it. Just like integrated health shield plan, right, they can increase it every year, the premium, if they want to, because it's not guaranteed. Okay, then what is the main difference? If you're buying like a life plan, right, or endowment plan, right, par fund performance is actually very important. Okay, so let's say even if like the premium pool is like not doing well, means like a lot of people make claims, but actually the par fund performance is how the insurers actually invest the premiums that you put to them. So if they invest the premiums very well, right, the premium pool, even though it's like pay out a lot of claims, right, still will be able to support the lousy claims thing lah. So the par fund performance is actually very important in seeing if your premium prices can stay as it is lah. Okay, and other things like how narrowly they word the contract, and then whether they pay out the claims as per what they say they will pay out lah. Because I mean, we all experience our fair share of buying an insurance and unable to claim, right? So yeah, there are some insurers that are more lax than others when it comes to claims, but there are some that are really very strict. If I say 90 days waiting period is 90 days waiting period, I don't care you are diagnosed on day 88 or day 89. Too bad you are not under this. Too bad, I just care about the contract. Okay, whereas there are some insurers that due to goodwill, even though you are diagnosed on like day 89, right, they can actually pay out the claim. Another area of claims experience is how long they take to pay out the claim, and how do you actually file for the claim, and how fast is the claim actually paid out into your bank account. So most insurers have gradually moved to pay now, if I'm not wrong. So yeah, So you will see like how many days. For example, today I filed the claim, will I get my money by the end of the week? So I believe for most insurers it's yes lah. Yeah, but also like when they are doing the claims, right, whether they will investigate super long, then if it investigate super long means a bit like unwilling to pay out the claim lah, so it might be able to find reasons not to pay the claim lah. So yeah, so different companies have different claims payout process. Okay, so all these are very important. Then please remember to pay your premiums in a yearly mode if you want to save money, because if you pay on the monthly payment method, right, is actually, if you add up times 12, it will be more expensive because time value of money. So if you have the money, you can pay in yearly premiums mode. Okay, but for some plans, not sure whether all insurers charge that way lah. For like investment linked plans, it's actually same for yearly or monthly payment method. Another reason to pay yearly instead of monthly is because monthly method is very easy for the plan to lapse, and you don't even know that the plan lapse because you thought it's like monthly deduction from your bank account or monthly deduction from your credit card. Then what happens when your credit card expire? Then a lot of people think they still have the plan, but actually the plan no more in force. Yeah, so always go for yearly premiums, and yearly premiums, they will usually send you a letter to pay your premiums. Okay, so another difference is the application process experience. So let's say I want to buy direct because I think it's cheaper. Then because everything I apply online, I have to read everything myself because nobody is servicing me ma. I need to do everything myself. So there is a lot of difference like in the application process. Like I want to ask, hey, is this covered? Oh, is this when can I claim this? What? So all these questions nobody is going to answer you. You need to go and type email and send in one by one. Yeah. So application process experience is definitely different. Yeah. And then after sales experience, so let's say you buy from, I don't know, like those kind of not so famous insurers, after sales experience is going to be dismal lah, I tell you. Yeah. Okay. Then other things like small things like whether they have a mobile application for you to take a look at your insurance, SingPass login for easy access overview. Like SingPass is really one tap and then you can go in, right? Yeah, but not every insurer offer it. So all these things are all after sales experience. Okay. Okay, lastly, it boils down to servicing agent. Okay, so what are the qualities that matter in servicing agent? Okay, so I think one is need to be honest and trusted. Okay, so recommend you based on your needs and your suitability rather than other things. Okay, then next is closeness lah. Closeness is actually quite high on the list because it's like if you're not willing to share much with the servicing agent, right, it's very hard to actually recommend suitable solutions. Okay, and also claims wise, right, if you communicate more, it will be more efficient. So let's say I bought an accident plan from person A, then person A don't know I fall down. They cannot tell me, oh, you fall down, you can claim, you know. So it's like closeness will definitely increase your efficiency of your claims lah. Like for example, I'm following my clients on social media. I see them, why hospitalized, why food poisoning oh, you know, food poisoning can claim or not. So all these things, closeness really matters. Okay, so let's say you buy from the website, then you want to get a quote yourself. Nobody's gonna tell you this one can claim what. You forget it, too bad lah. Yeah, so that's the thing. Okay, another thing is knowledge and education background. So I believe you have met your fair share of advisors who don't know what the hell they are talking about. Yeah, so knowledge and education background is actually very important to advise on product suitability and other areas such as tax, investment or life. Yeah, I mean, you don't want to put your life into someone's hands without knowing this person's education background. So let's say there's this advisor who go around, I mean maybe in his first year of career he didn't even do super well, then he suddenly go and buy a car, and then I tell you his savings is less than 10k. You want to put your life into hands of someone like that? Yeah, so actually very important have good knowledge, good education background. Okay, so he can't even like manage his own life. If you want to manage your financial life, oh my god, that's quite scary, right? Yeah. Okay, another thing is dependability. When you encounter an emergency and you want to reach your advisor urgently for advice, whether you are able to do it lah, so dependability. And then if you want to find out how to get dependable one, definitely go for referrals, because they have experience with their current advisors. Usually the good ones are the one who cares about health shield lah. So health shield is the lowest commission but the most claims. Then if the advisor don't really care about this person who only buy a health shield, right, then obviously it's like only out there for commissions. Yeah. Okay. Lastly is how long this advisor will stay lah. So if the current, so let's say I'm your agent, then one day I leave, right, then the new one that's servicing you, right, won't be receiving these commissions from you. They are less likely to be willing to serve you well. So that is human nature lah, because I never receive anything from you lah, why should I serve you well? Yeah, but it depends on individual agents, but that will be the normal mindset lah. Yeah. Okay, I've come to the end of today's session. Okay, so hope you guys have learned something new today, and then yeah, please share this video with your friends and families if you think this video has helped you. And if you have any questions, don't leave me a comment, just message me or reach me on other social media, because if you leave a comment I have to reply publicly, and not everything can be replied publicly. Yeah. Okay, so that's the end of today's video. Thank you everyone. Bye bye. Oh, please help to like and subscribe. Bye.